Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Monday, April 15th, 2013. I hope you've all had a good weekend. I wanted to start off by showing you something, a joke that I read in in an article in an article from John Mauldin that came out this week. Mauldin. Um, he's very insightful about what's going on in the market, and I am a regular follower of his. This joke about the engineer, the chemist, and the economist, I'll leave it up. I'll leave it up there for you to read. But basically, the gist is that economists are not scientists, even though they want to be regarded in that category. So as a result, we have a new presentation by the Congressional Budget Office that says that they are forecasting 4% growth, 4% plus growth in the next, not in 2013, but in 2014, 15, and 16, which is going to get us out of this quagmire. So they've already spent $1 billion, $1 trillion a year, approximately $90 billion a month to get us out of this. And that hasn't worked, and no one wants to make budget cuts. So I'm not sure that's, they say they're going to do it, but then when you look at the books, they can't do it. They will just argue until it's not done. So good luck with that one. They're not scientists. They make mistakes every single year. They make adjustments every 6 months. And this is what people are investing in the stock market on, like a wing and a prayer, hoping that their investments will go up. Just a word of caution. So the big news of the week is, or the last few days, is not the stock market but gold. But we'll come back to that in a little bit, because I am going to do an analysis of the gold market in here, because I just wanted to show you what can happen on a bad day in gold, and I want to relate what can happen in a bad day in stocks also, because no one anticipated that gold would go down. As it happened, well, I'll just tell you in a few minutes. But right now, the the waves are above zero all the way across, 1, 2, 3, 4, 5. T1, 2, 3, 4, 5 on the daily. It dipped down a few days. It went back up, and it took this carrying. Now, I said when this got above zero, which would be on Thursday, that I would get out. But I looked at it, and it was so slim, and because the 21 on the right-hand chart went below zero the very next day, and then T2 went down below zero. I am still looking for this to take some money off the table with most investors. Um, well, I, I don't think most investors will take their money off the table. I think their money will be taken off the table. And just to let you know, if we had a 4+% move in gold, we did have a 4% move in gold on, or even more than that, on Friday. If the same thing happened in the stock market or the S&Ps, the S&Ps would be down 70 points, 70 to 80 points, and the Dow would be down almost like 698 points, 700 points. So nothing is out of the realm of possibility. We are balloon high into the stratosphere, and you just have to be very cautious about holding long positions. If you wake up tomorrow morning and the S&P is down 17, 18, 19 points, it's really time not to buy the dips, but to just wait for a comeback, hopefully a comeback in 3 or 4 hour period, and sell the rally. All right, so let's break this down and see what's happening on a smaller trade basis. Let me just hang on one second. Okay, if you're a day trader, you would have gotten in the cleanest line break right here is at is when T3 goes below zero, and you're right about here on the crest as it's cresting over, and you are covering either on a smaller wave right here, or you're taking it all the way to the next wave the next day, which is here. So you're gonna miss the bottom by a little bit, but you got this huge move right here. And the same thing if you are playing the smaller waves the day before. You would be out of the market from this point to this point because T5 is above zero even on the smaller wave. I'm sorry, even on the smaller time frame of 1597. And you'll get back in right in here, which is right after the opening, and you would have made that move. All right, let's move on to a different stock. Okay, let's take a look at Goldman Sachs. Goldman Sachs on the left-hand chart here is firmly below zero. Let me get an arrow up here. It was above zero here. Made this tremendous run from 120 to 160, and now it's been under zero on the trading wave on the daily since about 155. And now it's kicked up a little bit, and you can see where it's kicked up on these charts on T3 and T4 on the 610, which incorporates quite a few days. You can see this is 1 day, 2 days, 3 days, so it's about 4, 5, 6, 7, 8, 9. This is about 2 weeks of trading, which brings you about back in this area here. So the 610 would have taken you above the zero line back in here at about 142, and you could have ridden this all the way up until one of these quits, either T2 or T1 right near the top. So right now it still looks like it's heading down. T1 is firmly below zero. Whoops. Going down that way, T2 is below zero, and T3 just hit below zero in the last couple trading days. So that's it for Goldman. I still like Goldman on the downside with a corresponding move downside in the market. Okay, Apple Computer on the left-hand chart. The only wave that's completely above zero is actually the trading wave, so you can possibly expect this to go. It's above zero here, but this has been kind of neutral. It's up a little bit, it's down a little bit, it's up a little bit, and now it's down. When it's down the last 2 days when the market was up. So, and the market was just barely up on Friday. Well, the Dow is just barely down. But you can see that T2 is starting to creep above zero. There's a move up on T3, but as far as T4 and T5 go, they're firmly buried below zero. There's no real. I don't think there's really any hope that Apple is going to make any move anytime soon to the upside. And we can look over on the right-hand chart here, which all these hash marks are the 8:30 bell in Central Time. This is Friday. This one's Thursday, Wednesday, and Tuesday, and Monday. And you can see there are plays in here if you're just using like really short-term plays. I mean, if you're an option player and you want to grab like like 2 or 3 points on an in the money move, here's a move right here, here's a move right here. Now you may have to wait, like a day and a half, but this is a move from 424 up to 435 before it quits on T1, and you can get back in on T2 and ride this down into the morning trade, and then you just quit that trade when it hits a major barrier or at the opening of trade, and then you can get back in some of these moves right here. So let's just push this out a little bit more, and you can see that the first time since April 8th, which is like 5 trading days ago, when it was above zero right here, that Apple has moved down. Oops, I went off the chart here. Apple's moved down below zero on T5 right in here. And as soon as it moved down on T5, basically the crap hit the fan at 434, and it ended at 429. And let's take a little bit longer viewpoint of this on a weekly to see if we can get an idea of some kind of parameters of where Apple is going. Okay, I think the last video I did, I had a target right in here at the, let me see, this is 89. This is the 144 exponential moving average, and the 21, is it the 21? The 8 period was coming down and matching it. I had a target right in here of 140, of 143, 144. Let's see actually what it did last week. Didn't quite make it. It made it to it made it to 442, not 142. 442 to 444. It actually made it up to 438, and that's when these signs on the, let's see what the 21 look like here. It's kind of a little, it's harder to see. That's in the last week, that's when this started sloping down in price, and that's when the waves started sloping down. They actually crossed on Friday one time, on T2 crossed, T4 was already starting below zero. It crossed below zero. These longer waves crossed below zero on T4 on Friday, and T5's been below zero the whole time. So let's see if we can come up with a number target for this for gold. All right, so my target, I'm not sure the date when this is going to happen, but if you're playing long-term out of the money options or just want to short the stock, my target for Apple is right here, 373, right where the 233 exponential moving average is. 373. It may happen soon, it may take a week to do, but pretty sure that's where it's going. Okay, on the rare occasion that I do a gold analysis for the free video that I put out, I'm doing this now because I want to show you what I did with my clients on gold. We looked at, I was looking at gold come up here a little bit, and this turned out to be a false reading when these went above zero, and it kind of like skylined up here and quickly turned around and started looking for a sell signal when it came in here. I wasn't sure whether it was going to come back up again, so what I did was I looked at the 1597 tick chart, of gold for an entry. You can see as I move the cursor across on the right, you can see where it is on the left. And as it was coming down, as I realized on the 20, you already know the 20 on the graph. Let's put the 21 over here. The 21 was coming down a few days ago, and I was looking to see where a good spot. I'm not always going to take the first shot of the 21 because I want to make sure T1 is down. I want to make sure T2 comes down, and it's somewhere in between where T2 comes down and T3 comes down, which is the best shot for it. And I knew it was going to be at least a 20-point move, because when T1 rolls into T2 on the 21-minute chart of gold, then it's bigger than a 10-point move. So I look for 10-point moves when it's on a smaller chart, like a 610 tick chart, or sometimes a 1597, like a move from here to here. That's about a 10-point move. That's about an 8-point move. But when it's in concert with a move on the left-hand chart below 0 on T1 and T2, then you know that these 10 points are going to turn into bigger moves. So I was looking at this chart and thinking, I'm going to tell you my analysis on this. What I did is I didn't take the top. Okay, so this was my analysis, and it's not just the waves that are working, but there are timing and point spreads that are included in this analysis. So what I did was I grabbed a fib tool, and I went from this high point on October 4th, 2012, and I brought it down to where it had moved, I believe that's like 120 points, and between this point and this point, if you can see the cursor, between this point and this point, was between the high and the low was 30 days. So then that was one wave. So the second wave, this isn't a Triton wave, but there's just, like a wave down, like a bump down. So then I took it and I moved it to the next one. That was also 30 days, and that was 120 points. So I moved it down to the third one, which was also 30 days, a 30-day move, and also 124 points. And I came down to here, and I put the cursor right at this point, and I estimated that the point would be, I estimated that the month was over on April 20th. So I thought that it would come down 120 points by April 20th and would have a chance to get in, maybe do some counter trend trades to get in again on the downside, maybe 2 or 3 plays to the downside with some counter trend trades also. So I had everyone that is a client of mine in at 15. And okay, I'm gonna move to the I'm gonna move to a smaller time frame chart here. So I was looking for an entry point and looking, and as it happened on Thursday evening, all of my clients were in right here at 1567. Now some of them got out here, some of them got out at 20 points, some got out at 50 points. There was one guy who held it and actually captured 80 points out of the 88 points. That is $8,000 per contract. He's a very, very happy camper. And this is what I do for my gold clients. I'm showing you this because I just want to let you know what the opportunities that are out there are. So far this year, let me bring this out one more time. So I can show you what's been going on since the beginning of January. Let me see here. Hang on. Hang on, I'm figuring it out. Okay, so that's $250 since the end of January. So if you had one contract, you made $25,000 on it. If you do 3 or 4 contracts between 75 and 100,000. Not a bad take for, and I actually have one client who trades at least 1,000 to 1,200 contracts. So add it up. Very, very exciting. I wish I could tell you, you know, like if we look at the, let's look at the, okay, so right now on the 1597 tick chart, this is still below zero, below zero, below zero. This is starting to work up. This looks like it's this pattern of up, down, and then up. It looks like it wants to work its way up a little bit, and T1 is above zero. So this is going to work itself up a little bit. I'm not sure what price it is, but I will know when the time comes what these waves look like and where they're going to be positioned according to the their points of resistance on the weekly and the daily exponential moving averages. I will look at those in detail for anyone who is who's trading gold as a private client. So please let me know. You can get in touch with me at tritonwaveguy@gmail.com, and we can discuss trading options. The trade here Triton. I'm sorry. Let's do a little circle here. tritonwaveguy@gmail.com. I love trading gold. I will do silver. I just wanted to highlight the National Association of Day Traders and Brian McGowan, who founded it, has been very, very helpful with me in helping the Triton Wave Consulting move along. And I wanted to personally thank him for his work and effort into this association. It's an amazing association if none of you belong to it. So there's I don't know how many thousands of participants he has, but it's one of the best day trading associations out there. So thank you, have a good evening, and good luck trading.